Okay, traders now. Everything's settling down after last week, right? So the Fed really stirred things up. Since then, we've seen a little bit of erratic sort of price action, but things have stabilized and we're now in a position to sort of really sit back, have a look what's coming out. We've got a lot of good key data this week, and it's all second, third tier numbers, especially out of the US. So the US picture this week will become a lot clearer. And through that, as these releases come out, we can start to see some adjustment either up or down in the dollar. Now, the one of the things that you have to look at too is the US dollar. It sometimes does suffer from almost being too strong, right? European, UK, Australia, New Zealand, Canada, everyone's sort of in a bit of a struggle. So what we might see is the dollar sort of rally from here on other country weakness, right? The US Treasury yields, they look like they've gone as far as they want to at this point, right? We did see the yields go up last week. If anything, they've come back a bit. So that tells me as well, that's been factored into the market, right? So you look at the overall situation at the moment, we've got a bit of a risk on play here with US equity futures rallying. Are we seeing that across the board on the currencies? Not at all, okay? No one really wants to play just at the moment. And that's what happens after traders get kicked around for a week. You know what? They get a bit sore, a bit frustrated, and they stand back and just wait. So let's just have a look at the charts, and I'll take you through the week. You might think, being the last week of the month, there's not really much on, but I can tell you it's actually really shaping up really nicely. Now, just having a look at the board here, obviously the big moves from last week. The equity markets bashed up big time, right? If anything, oil is starting to, we had this massive rally in oil, a nice little clean out to the downside, and now it's starting to form some shape like it wants to go back down, okay? Gold sort of pretty much sideways, euro down, the dollar index up at this point. So that's where we are with the sort of global markets. If we nail that into the currencies, well, the dollar, it is going up. This is what I'm talking about. The price action here is stalled pretty much on a lot of these pairs coming through Friday, right? As I said, most of the markets had enough. They've been getting beaten up, so they stand back. But we do have some really solid trends here on euro and sterling, dollar Swiss, obviously dollar yen, whereas Aussie and Kiwi seem to be, they're sort of just drifting sideways. They're sort of getting a bit of a start, but then stalling. Now, I do like the shape of euro and sterling, because what we could see in these couple of instruments, and I'll show you the data here in a second, we either have a big chance of a nice pullback, like 100-point pullback towards resistance, pretty much on both instruments. So if we get strong euro or UK data, you're going to see that, or weakness in the US numbers. Now, let me just take you through these numbers, because this is the week. This is one of those telling weeks where, we don't have inflation or employment numbers, but we do have a lot of the building blocks that make up the rest of the economy. And they can tell us a lot more about what's happening. Now, the Fed, they've pushed themselves into a corner, a very strong hiking sort of stance, very hawkish, and that allows us somewhere to move. If the data's weak, it's against what they're saying, well, that means the Fed's got to come back and correct that in a week's time or whatever it might be, whether it's a speech, an announcement, or we wait for the next meeting. But that's how this is going to play out. The fact that the Fed have already done this gives us an advantage. Now, coming into Monday's trading, the IFO business numbers, Christine Lagarde there speaking, the ECB president. If anything, the Dallas Fed Manufacturing Index to get the US numbers off on a strong note. And then you come down through Tuesday, and this is what I'm talking about. You've got the S&P Case-Shiller home price numbers, the consumer confidence numbers, some new home sales numbers out of the US. So, and these numbers aren't the ones that are going to like violently move things. They add up, and the market will slowly move with them. So these are more traditional sort of trading instruments, I guess. They tell you what's going on, and without the hectic volatility is what I'm getting to. Aussie, the monthly CPI indicator will be a key one for the Aussie dollar Wednesday. And then you come back into the European session. We've got the consumer confidence numbers the ECB non-monetary policy meeting, get a bit more insight into what these guys are sort of chewing the fat over each week. Then once again, back to the US dollar with durable goods, right? A good historical number. By then, if we're starting to see all these numbers coming out strong or all of them weak, we're going to start to see a shift in the dollar through Wednesday. And then as we get into Thursday, Friday, things really pick up because we get a lot more data coming out. Okay, the ANZ business confidence numbers out of New Zealand, retail sales figures in Australia. Then you get some, economic sentiment numbers out of the EU. The inflation rate out of Germany, obviously a very important component of the euro sort of picture. GDP numbers out of the US. Now, the final numbers, they're usually pretty close to the mark, but I'm interested to see what the initial jobless claims does this week, pending home sales as well. And then you got the Fed Chairman Powell speaking there as well. So Thursday, you're going to have your hands full trying to sort of keep track of what's going on there on the dollar. And then you come into Friday, some Japanese numbers, which I don't really expect anything out of. Germany retail sales, like you're looking for these finer details. Like if we find out that the German retail sales are falling dramatically, right, and they have been, well, that tells us a lot about what policy's going to have to be in Europe. And we already know it's a little bit on the down low. So at this point, okay, GDP growth numbers, final numbers out of the UK, Christine Lagarde speaking, employment numbers. What you're really sort of getting down here to the very final part, this is probably the biggest numbers for the week. You got the inflation numbers out of the Eurozone, GDP numbers out of Canada, the PCE price index and personal spending numbers out of the US, and there's a bunch of other US numbers there as well. So Friday, you know what? It's a shame that day isn't Tuesday or Wednesday, because then we get a full week to sort of for the market to look at the numbers, factor in the results, see what it does to the dollar. So by Friday, we are going to have a very good idea, as I said, what's happening with the dollar. Of course, the following week, we start to roll into the non-farm payrolls and the whole cycle starts again, right? So this week here is a great week to shape the dollar from what we've been seeing. We know what the Fed's told us. We know where everything sits, okay? And if you come back and have a look at the sort of longer-term charts, get a look at the medium to long-term trends, it's very clear, right? I can't see the dollar turning around just at the moment, but there will be moments where we do get a chance to sell dollars based off all the other data, right? Dollar CAD sort of sideways, euro down, sterling down, and Aussie and Kiwi, they look like they've sort of found a bit more of a base down there, where euro and sterling look like they've still got room to go on the downside. This is what I mean. If we get strong numbers to start the week, the Dallas Fed manufacturing index, if I can get that out, and then the S&P Case-Shiller home price numbers and the rest of the numbers start to come out even slightly strong, it doesn't mean the Fed are going to be hiking more and more. It just confirms the whole picture, and the market will be happy to buy dollars even at these levels. All right, so hang in there. The last week of the month, as I said, usually there's loads of speeches and it's a little bit haphazard. This month, the data is there. We've got plenty to focus on. And don't forget, I'm only focusing on the second and third tier, the first and second tier data. If I take it back one step and go for even the low impacting numbers, you're going to find there's a huge amount of extra data there. Will it impact? Not really. But if you want to look at it, make sure you check it out. So anyway, quiet start to the week. I haven't sent any random news out. Get your charts up to speed. Try and connect with what's happening on the dollar and the major trading instruments, whether they are equity indices, currencies, commodities, etc. And then you're in a good position to analyze the markets and then put trades into play as the opportunities arise. All right, guys, have a good one. All the best. Cheerio.